Nasema ako karibu kuanza.
We are already live. So we are already live. Can you hear me well on your end, Edwin?
Yes, I can, Matthew.
Okay, all right. Maybe we can kickstart.
Yes. So basically today we'll be focusing on reprogramming our mindset as traders. So when it comes to trading, a lot goes into how we make decisions. So our mind is part of what will determine our success in trading. So ideally, what we're trying to establish when we cover this session is how we can, what kind of mindset do we need as we trade? Because most of our decisions will lead us, or the results that we'll get are in most cases determined by some of the decisions that we make based on our mindset. So yeah, Matthew.
Yeah, just basically, just what you've said is the truth, because you're looking at the frame of mind. You see, the mind controls everything. Whatever you do, your mind is in control. So here we're talking about the frame of mind. Yeah. In this case, we're looking at the trading psychology. What frame of mind should you have? What's the mindset that you're wearing when you're trading? Because you know this market, of course, has got a way of eliciting emotions. Sometimes you get profits and you so happy, you very excited, and now you want to feel like you want to keep on trading and buying and selling and making the profits all the way around. And that's on the extreme. On the other end, you lose trades and you're feeling like, hell no, I'm feeling like I should not even be trading. So those two extremes is what you want to check out and know, how can you even take control of it? How can you be back to the right mindset? How can you get that balance even when you're already experiencing those things? Because when in this market, whether you're experienced, whether you're a novice, whichever level you are, it's all about profits and losses, because they are like the two sides of a single coin. So what we need to do is just wear the best mindset once we experience these challenges. We can go ahead, Edwin.
Yeah, so when you talk about psychology, it refers to the mental and the emotional state that tends to influence our decisions as traders. So as I've stated, your emotional state has a lot to do. In fact, most people say that it accounts for the largest percentage in terms of how successful you turn out to be as a trader. So it therefore plays a key role towards our success in trading. So it therefore has a strong bearing on how successful of a trader you become in the market. And that's the reason why we will be looking at different elements of psychology. And today, we are mainly focusing on the continuous improvement aspect of our mindset. So we must acknowledge that the markets are uncertain and uncontrollable. You cannot control, you have no full control of how the market will behave. But as a trader, you can, your decisions, the decisions that you will take will obviously have a bearing on the outcome that you will get. So you can never be 100% sure, but the decisions that you take will have a part to play regarding the success that you will have, or lack thereof as you trade. So price is purely driven by buyers who create demand and suppliers who create or sellers who create supply. So that being the case, you can therefore be able to study the markets. So you need to study the charts, identify the patterns that recur over and over again. And that is what would guide you to know how to react based on what the market, or based on the signals that you're getting from the market. So you can only enhance your projection based on the decisions that you take, or the actions that you take as a trader. So you have no full control, but depending on the level of skill and experience, then it will determine whether or not you will be successful, because the actions that you will take will be informed by the level of skill that you have in the market. What do you have to say about that, Matthew?
Well, when we talk about control, you see, we're and maybe going back to the point where we're talking about uncertainty and having a market which is not, we're not really in control of the markets. You see, that's what provides the opportunity, having the market moving in manner that, of course, we're not in direct control. But what we have control of is whether we need to buy or whether we need to sell. That one is in our hands. So again, going to a very important time, we've talked about decision making in the markets. Of course, you need to be aware of what is happening in the market, what uncertainty points are you able to take advantage of. So you make the decision where you would want to get in, buy or sell, and then, of course, the uncertainty, you have to control it, of course, starting from the frame of mind where you're going to try and put off the level of anxiety, you put off fear that you have, okay? And that's going to give you the confidence to wait for the price to move, even when it's so close to the stop loss, and you can still hold and wait for it to be hit. And most of the times might not be hit. Or if you find yourself you're in a losing position, but you're avoiding to add into that losing position, even when you still have a very strong belief that you're in the right side of the, you're taking the right position. So yes, Edwin, it's about a decision and developing that toughness of mind, or that mental toughness to be able to stay within within a controlled zone. Having in mind there is the extremities of being overly excited, being so confident, or even being so fearful. So yeah, it's a really uncertain environment that mind is like the driver. Even when you have the skills, still you want to be in the right mindset for you to be able to, of course, succeed in this market.
Precisely. So basically, this environment is complex, I would say. So it's complex, and it's characterized by ambiguity and volatility. And volatility is what brings about opportunities. So the outcome of your trades are highly pegged on your ability to predict how the market will move. So there are numerous ways through which you can secure your pie in the market. So we are all different. Our personalities are different. So depending on how you'll approach the market in terms of spotting opportunities, that is what will guide you, whether indeed you will get your pie in the market and how much you will get. So it all depends with your ability to accurately predict where price will go. And depending on where you get into the market, then again, that will determine how much you're likely to make based on the accuracy of your prediction, and how long you will stay in the market. Because ideally, the perfect scenario would be a case where you'd want to get into the market and bag whatever you're targeting to make within a short duration of time. So there are different ways to achieve that. Again, given that depending on the level of skill, you will notice that as you start as a new trader, most of the time, I don't know whether you have noticed this, Matthew, but most beginners tend to trade on short-term basis. They lack that patience to execute trades and leave them for a considerable amount of time to allow them to run.
Yeah, sure. That's exactly what happens in the market. But I think on my end, I see, you see, when you go to higher time frames, you need to wait for those patterns for quite some time to form. So when people are starting, this is something I've seen. They want to see those charts, those channels happening. They want to see those support resistance levels. And so they happen so fast on lower time frames. Well, yes. That is one thing that I think makes traders to go and start there, which is not quite bad, because as well you can make profits there. But again, patience comes in. If you're doing that one to build the experience over time, and then you'll be able to translate that one, in my opinion, that might not be bad. But like you're saying, patience is very important. And of course, patience, you'll be able to practice it more if you go to these higher time frames, because of course, if you see a very nice setup of a market reversal, let's say on 4 hours, then of course it's likely to pan out to give a very nice trade, even in the long term, that you can ride for like let's say the whole day or for several hours. And the patience is coming in where someone is able to wait. But that's what you need to develop, that art, or that ability to wait for a good setup in a high time frame, so that then of course you get a good entry into the market and get that pie that you're talking about, Edwin.
Yeah, actually what I've noticed is that in as much as most new traders are reluctant to use higher time frames to spot opportunities, what I've noticed is that when you analyze based on higher time frames, it might take time before you spot the right opportunity. So opportunities might be few, but those opportunities which are obtained on the basis of a higher time frames tend to give you a higher level of accuracy in terms of
high quality,
exactly high quality trades,
high quality,
as opposed to a case where you are trying to spot opportunities on lower time frames. So that is what I've noticed with time.
Yeah, actually, there's another element here. Sorry for cutting you short, but
no, it's okay.
Before I forget, you see, again, we're human beings. We're using our brains. We're looking to the charts, unless for someone who's using a bot. If you're training yourself manually, you're in the charts, you're analyzing. You see, we always tend to get tired. So imagine you'll be looking for those setups happening up in 5 minutes, and you can see several, within 1 hour, you've seen several break of trends, you've seen several descending, is it triangles? And then you've been trading them, because of course, when you see an opportunity, then of course, you're going to execute your plan. So imagine you've been seeing those setups happening all over throughout the day in various financial instruments, various currencies. You see, yes, you get those good small entries, but then you're going to garner some very small profits out of it, because you're getting small movements, and you're likely to get tired throughout the day. You're likely to make a mistake of over trading. Okay, so when you are on higher time frames and you're analyzing the market, of course, then if you're waiting for a setup to come up maybe in 4 hours or even 1 hour, it means you're going to give yourself like several hours or maybe several candlesticks to happen for 4 hours for you to get a very nice setup. And then in between, you're doing something else maybe, and you'll be checking your markets within intervals that are not really so close, and you find yourself not very tired. So again, Edwin, I'm looking at it on the side of whichever style of trading you choose, because I'm not saying that you cannot trade on lower time frames, but looking at the aspect of patience and also taking care of your mind. You don't want to get tired and then you're over trading the markets. So I would recommend higher time frames, yeah, because again, you want to be in some very good shape as you're taking your your trade. So yeah, hard time frames.
So yeah. So
Setups.
with shorter time frames, I would say that given that you're taking trades more frequently, so the frequency is what would lead you to landing onto the wrong side of the market, because that frequency would mean that you're taking too many trades, and at some point you'll be caught up.
And then before something you see, with human beings, we human beings are we're not the same, but we are wired almost in a we're human beings. We are wired with a human mind, just maybe for lack of a better word. You see, the way when looking at lower time frames and you're getting good setups, of course you killing the market, get some profit here, get some profit again, get some profit again from those small setups. What happens? That is where now the one extreme of the emotion sets in, because you feel you're very excited. Now you're happy, you're winning in these markets. Some people would say, we are killing it. Yeah, we are killing it. Yes, of course, you're killing it. But that excitement at some point, it will reach a level where you're so happy. And now your mind is keeping telling you, keep buying or keep selling, keep trading in the markets. Right? I don't want to again start saying that you will fall into overtrading, of which it will happen. But going back to the human mindset is where something that gives you pleasure, right? Something that it appears that it's rewarding you. It makes a human being start to overlook some very basic elements, right? And that's why now we start making mistake. For instance, let me speak about the easiest, one of the easiest things that you look in the markets. Maybe you've been trading on lower time frames, you've been using break over trend, or maybe break over channel. So at some point, you might forget that you need to wait for a retest, because it looks so obvious. You've traded for the last like three times that you've won, and now something like that appears, right? And you won't even forget about a retest because you've been getting profits. You think it's obvious. That one is one of the problems that actually appear in us human beings. And you find yourself after a very long winning, after a very good winning streak in a day, then you get one very bad trade. So
and that, in most cases, sorry for cutting you short, is the trade that will wipe out all the profits that you had made initially.
Exactly. So that frequent, that overtrading, that frequent winning, what is it? That frequent winning sequence in the market, winning sequence in the market is likely to set your mind to forget the key things you should be looking at. And that's what you want to look at as a trader. You want to make sure that you're following the rules. Okay, even if you're getting too many setups, again, avoid when you find yourself winning so much in the market, there is always some form of a bad luck around there, because you're likely to start forgetting some things to implement them, because your mind, you start getting tired, you start ignoring some things. Now the winning euphoria sets in and things start going wrong.
You become overconfident.
Overconfidence sets in. Thanks for bringing all these good these mistakes. Overconfidence sets in. You've been winning for the last 5 trades anyway, and it seems like it's a no-brainer. Becomes overconfident, right? And things start going haywire within a short time.
So still at the same point. So so the best analogy that I can think of is of an opportunity is like a destination. So there are many ways towards reaching a particular destination, but you can follow different routes. So it's not that there's one specific way through which you can be able to spot opportunities, but it's just a matter of identifying your personality and the best way, the most comfortable way that you can be able to trade. So there are different routes, but all these routes would lead to the same destination. We all want to make profit at the end of the day. So it's a matter of you identifying the route that works best for you towards that destination. So when it comes to online trading, there are numerous opportunities every other day. So in some cases, you will notice that some days might be a bit quiet in comparison to others. And in some cases, you might have a good day where you might be able to spot 2 or 3 opportunities in the same day. So knowing all these market dynamics sort of tend to play into how we react to different situations in the market. Don't you think so?
Yeah, learning about yourself. Sometimes you see what I see, and when I'm with guys in the training, I always give them, like, for example, a trading strategy, and you find one of them is implementing it quite well, the other one is having challenges. Why? Because you see, we are different. We might be trading the same strategy, yet we are implementing it in a very different manner, right? And we get different results. So I think it's all about understanding. In as much as you're trying to have that mindset, you're trying to understand yourself, find the balance, what really works for you. We might have that same trading strategy, the same approach to the market, but our characters are different. How we react to situations, and what really appeases you when it comes to when you play in the market. Again, let me also note that we've talked about trading on higher time frames, waiting for setups on lower time frames, and on lower time frames. It might seem as if we are like recommending any so much more than the other. Remember, there are people who trade on lower time frames, and they have developed their mindset control or their psychology on how they can manage their emotions when they're trading on that time frame. And there are others who are trading on higher time frames, and they know how well to take care of these extremes. So it's all about finding a balance, whichever style that you're trading, whether you are like a swing trader, a scalper, or you intraday, whichever way you're doing it. The most important thing is that strategy you're implementing. You go to the market plan. How are you able to tailor make it such that it's not going to whatever outcomes you get, whether winnings, whether losses, is not going to spike the way you are reacting in the market, and that's very important. Just wanted to again make that one clear, so that it doesn't appear like one is better than the other. It's just a matter of what do you choose, and when that works. But I see, Edwin, you like higher time frames.
Yeah. but then again, I mean, it all boils down to consistency. As traders, that is what you're trying to achieve. That is what we strive to achieve, because if you can establish a consistent way, whether you're trading on 5 minutes or an hourly chart, or on the basis of a daily time frame of 4 hours, if you can be able to trade consistently, it's not that you will not encounter losses, but at least trading in such a way that when you're winning, you're making more, and when you're hitting losses, you're losing the least amount of money.
Yeah, I think
at the end of it all, like when you have a bag of 100 trades within, let's say, a period of 3 months, ideally, in that bag, you will have losing and winning trades. But the big question is, as you do your P&L, you'd want your trades to be in such a way that if you are to compare winning trades against losing trades, then the profit that you've made on the total amount of winning trades should be able to offset the losers or the losses that you've made with the total amount of losing trades, ideally.
Yep. Edwin, I think on that aspect of the winning trades, losing trades, of course, then we have the risk reward. I think we might want to hold a special maybe live stream on that one, because there's quite a lot to speak about, especially when it comes to your win rate, right? because again, win rate, and then of course you're talking about the risk reward. It goes, it's so much deeper that you can dive into based on that one. But yeah, there are opportunities there. It's all about being able to leverage on what best works. And of course, having in mind that you're looking at the probabilities. So when we talk about the probability and the outcome of the trades, of course, is based on probabilities. Do you when you place a trade, you have got a higher probability of winning? And how is your probability getting along with the way you feel with the outcomes, right? I don't know whether it's coming clear, but your probability of trade, because someone who will be trading and then they've got a 50 probability of winning a trade. If you put 2 trades, then you've got like a likelihood of getting like half, right? So if you put in a trade, you're likely, maybe 4 trades, you're likely to win 3 and lose 1. So all that style of trading, how are you able to come to a point where then you decide I'm leveraging more on win rate, or maybe I'm leveraging more on the risk reward.
Risk rewards, yeah.
Exactly. And how is that one sitting with your mental state and your style of trading? Because again, it's all about probability, nothing on luck. It's all about probability, and having the higher probability is better, right?
Yes.
So nothing much about luck, but of course, luck comes when there is an opportunity.
Yeah.
Again, there's some level of correlation.
Yeah. Speaking of luck, for new traders, I tend to feel that as they start, they sort of like that element. The element of luck tends to play a great role as they trade, because if you agree with me, Matthew, when you began to trade, ideally you didn't know much. You didn't know what you're doing.
The first trades start with like something like a luck.
Yeah, there's that element of luck when you're beginning, but as you grow into it, ideally, if you're passionate about it, if you have interest, then you obviously want to learn more and know better.
You want to turn it from luck to a skill.
Exactly.
Yeah, from luck to a skill. Because actually, the first trade someone takes, it's more of luck, because you're told, well, no one introduces to a strategy at the beginning. It becomes very difficult, because you're told it's all about indicators and adding some more technical terms there. You just told you need to buy when the market is going up, or you need to sell when the price is setting down. So actually, the first trades you might be asked, do you think the price is going up? What do you think about this market? Want to sell or want to buy? So at the very beginnings, when someone is a novice in the market, it's more of like a luck, and then over time, once you realize now that you go on realizing that you can actually get profits, and you start getting the negative parts of them, the market starts biting you, when you make losses. Now you want to graduate to a higher level of where now you're implementing your trades as a skill. Okay, so the luck switches to a skill. Okay. Precisely. And that switch between luck to the skill is where again you want to switch your mindset. It's where you want to switch from the wrong perceptions in the market, because the people who think about luck in the markets are the ones who want to get in and become millionaires all of a sudden. You want to get in that small amount of money, and you're raking in large amounts of profits. You want to be influenced by people outside there in the social media who are posing with Porsche cars and dining in very great places. So you want to get in even before you get the skill and start being successful immediately. Again, it's part of the mindset. And in our first classes, of course, we speak about how someone gets set. And this is very important that I repeat it even here, that even before you go and start learning about how to draw those trend lines, how to use the Ichimoku Kinko Hyo or use the BTMM, you want to first of all understand the right way of starting in these markets, because again, going back to our minds, it becomes difficult to unlearn a wrong thing which you've learned, and it goes back to the mindset. If your mindset is Edwin, you'll agree with me, the mindset is you want to go in there and go kill these markets. Of course, you can't kill the markets, but it becomes difficult. You want to get in with an approach of luck, as compared to getting in with an approach of building the skill. But of course, as you're beginning, you might begin with luck, getting profits in there, in profits, losses, and then over time, you want to get from luck to having that skill. And the skill now, once you master the skill, is where you're able to match your trading strategy, match your trading style, match the financial instrument which you trade with a control, some level of control, where you're able to of course, put away the fear in the market, put away anxiety, whether you've been winning all along, whether you've been losing, you still have that confidence to keep going into the market. So we're talking about changing from the luck way of, maybe the lucky way of trading, to that skill. That's the thing that we're looking into. That's what you want to feed into the mind. Yeah.
Yes. So basically, as you develop your skills and as you gain experience, basically what you'll notice is that that element of luck will sort of be overshadowed by the experience that you've gained over time. So the more hunger you have, the better it is for you, because you'll be able to acquire the necessary skills and knowledge in order to sort of like go to the next level.
Actually, if you want luck in the markets, because it appears, you just put a trade and you realize that's when it's aligning with a very big move coming in. It will come with skill. Like for example, consider the case where I just want to speak about what was happening previous here in the markets. Of course, again, one ways of making sure that you have the right frame of mind and you are confident in the market is also knowing what's happening around, because you understand pretty much the likely movement that might come, and you're not fearful. So remember when we're having the attack by the Russian attack on Ukraine, and of course we had a very big move in gold, right, and even in oil.
As well, yeah.
So of course, no one knew what would happen. Even when they attack, no one would know what would happen. But imagine if you were aware of the occurrences in the market, you had that knowledge, and you're seeing that, of course, when we have such uncertainties coming in and people would tend to go to the safe haven like the gold, then someone has got the scale will go and take in the chance of going long. And then all of a sudden, you never know when the market will move, but then it takes that big move from like for some of the gold from 1970s, 1960s, 70s, all the way to the 1960s, 50s, 60s, all the way to 70 within a very short time. That one might be luck, but of course that luck has gotten you because you have the skill and you had already taken a position in the market with some confidence. So once you have that skill, that's what I feel, that's what I understand. Once you've got the skill and you have the experience on these markets, then of course luck will tend to befall you, although not all the times, because again, bad luck also is always around.
Yeah, I agree with you. It's very important for you to know what is happening, because by knowing what is happening, then you will know when to avoid to be in the market and when to participate in the market. So yeah, it's very important for you to know.
Yeah. Looking at that before we go to the next slide. Looking at that second last bullet, the more the trader stays in the market, they gain the right experience. Experience. So of course you might have experience, but the wrong one. The right experience is where
Yeah.
you're taking the right steps towards developing your skill. Because of course, whatever you train your mind at the beginning, you will have to take again a great effort to unlearn that.
Yeah.
Right. So a good start is very important. So the right experience is what we want to insist more on at this level. You can proceed to the next one.
So this is basically an illustration of the continuous improvement mindset. So ideally, it's sort of like an iteration. So you need to prepare, and preparation calls for you to have a systematic methodology. So you're not entering into the market on whims. You want to have a methodology which works, whereby upon identifying certain conditions happening or certain conditions aligning, then you're able to know that you have an edge in the market. So it would then call for you to have a strategy. So this is the methodology that I'm talking about. So once you have the strategy in place, it's just a matter of patience to wait for a particular asset to have these conditions aligning. So obviously, a strategy would constitute different set of signals or conditions. So it could be on the basis of technical analysis, or more often than not, it's most traders, I tend to feel, trade on the basis of technical analysis. But of course, you have to know some of the fundamentals that are driving the market. But decisions, to a large extent, are made mostly on the basis of technical analysis. What is the price telling you?
By the way, as you're speaking about the fundamentals and technicals, and this has been a long debate all along. You see, there are people who like trading on technicals, people like trading on fundamentals. Some would say that, of course, the fundamentals will give the most profits, or the technicals. I don't know. What's your take on this? Because for me, I think a hybrid of being prepared in terms of the technicals, what's happening in the charts, and also the price patterns, and also being aware of the events in the market is likely to give someone a competitive edge when it comes to winning in this market. I don't know, it's something we can argue, but what's your piece on that? What's your piece of mind on that one, Edwin?
So ideally, how I look at it is that they are intertwined, because ideally fundamentals is what feeds into how price would be mapped on the chart. So ideally, my perception is the chart is sort of like a mirror of fundamentals. What is happening on the basis of fundamentals will eventually be mapped out on the chart. So yeah, so that's my perception. Yeah,
quite agree. But this is something we can debate for the longest.
yeah.
But on preparation, I want to add something on preparation. I want to give a scenario of someone. You're going somewhere, or you find yourself somewhere. You don't know where you are. You don't have a plan. Okay, like you just confused. Okay, so that is a scenario of someone who doesn't have a trading strategy. You find yourself in a place, you don't know why you got there even in the first place. You don't understand how to get out, so you don't have a plan. So simply, how I would want to approach this preparation stage, it's where you have like sort of go to the market plan, like go to the market strategy or something like that. You are in these markets, and once you find yourself in the charts, you first of all know, what am I looking at, and what do I understand first? Am I looking at a trending market? Am I looking at what type of information am I getting in there? And you get prepared, and that one is going to give your mind, of course, be at peace with what is happening, right? Because you know then you can understand, maybe, or not actually understand, you can pick out the likely move in the next maybe few candlesticks or maybe in the next few hours. Of course, it's speculation, never 100%, but when you're prepared, of course, you have a plan, something that shows you something that you're going to use to know that I'm going to take a step 1, 2, 3, and get something in the market, get in, get something, or get nothing. It's all about losses and profits, but being prepared, it goes a long way into giving a trader that cool mind, that relaxed mind, and you knowing I can either lose or make a profit based on my plan of action in this market. So yeah, preparation, first step. Actually, in everything, you see, I look at these practices in trading, and they look like they're the things that we implement in our day-to-day lives. Like, for instance, when you want to do something, how do you get into a business that you don't even understand what it is? You're not prepared about it. You don't have a plan of action. You don't even knowing the next step you're going to take, or if things go right, how are you going to expand, for instance, if it's a business, or if things go wrong, how are you going to exit out of it? So being prepared, and of course, having a strategic plan. And this doesn't have to be a very big book where you've written a booklet, just like simple rules and following them. So preparation.
Yeah, actually, strategy is basically some simple rules that you'd want to tick
Exactly.
upon spotting a potential opportunity in the market.
Exactly. And that goes a long way in having the mindset really focused, being at ease, and relaxed when you're taking the trades.
Yeah, so it sort of guides you whether or not to take that. So if you cannot take majority of the rules that you set, then you just assume that that is not a viable opportunity for you to take.
Exactly.
Then
and at that point, you are peace of mind, because you see also there is this fear of missing out. See, you're using a trading strategy. It's not showing you that you should enter, but you're feeling, well, I'm missing out in this very beautiful this trade, which might turn out to be very rewarding. There is volatility in the markets, and I'm missing out. So again, following the rules will help you avoid the pitfalls of fear of missing out. Just want to go in even before you check all the boxes for the rules that you're following. Nice.
Yes. Yeah. So once you have the roadmap or the strategy in place, you then want to execute the trade. So when it comes to execution, ideally, you have to ensure that you're taking the right position or the right lot size with your trades, because ideally, when it comes to risk, you should have an idea of the maximum amount of money that you should be looking to risk in the market. So you should know your risk per trade. Like if that trade does not pan out, then how much are you likely to lose with that trade? So you need to know that, so that as you position, as you size your trade, then you'll be in a better position to know how to execute. Will you take a small size of a trade and enhance your ability to give your trade enough breathing room? Or would you rather take a significant size of a trade, which would then mean that you'd have a small margin to set for your stop loss? So execution would also call for you to have the right skills to balance between what position you will take and how you will set the risk parameters, like how the margin that you will set for your stop loss.
Yeah, I hear the aspect of I just feel the aspect of different personalities coming up here, because like where you've mentioned, someone wants to execute, you want to execute a plan. Yeah,
Mhm.
you want to buy or sell based on a certain strategy. There's someone who would prefer to set a small stop loss. Of course, that means that taking a big lot size and then be able to maximize on a very small movement, get a lot of money within a very short movement. Or someone would want to take a very small lot size, of course, give the trader space to play around before moving to the profit. So different approaches again. Yeah. Different approaches again. And but I think execution is one of the easiest things if someone is prepared. Because like execution actually means going put that lot size, put the stop loss at this point, calculate the risk percentage which you're doing in the market. And of course, on the exit entry, you have the stop loss and take profit. So I don't know what your thought about this is, Edwin, but to me, execution is really very much dependent on preparation, because if you're really prepared, then it takes shorter time to execute. I don't know. What do you think about that?
Yeah, when I talk about balancing between position size and the margin that you set for your stop loss, you see, every other day we encounter different market conditions. In some cases, we might have a very volatile market. So if you notice that at a particular day, there's a huge volatility across a spectrum of assets which you might be considering, then it would call for you to balance between those two. But then again, when the markets are very are calm in a way, then it means that you'll be in a position to sort of increase the size and set a lower margin for, or a lower distance between stop loss and entry price. So yeah, so it all depends with the level of volatility in the market. Then the other thing is timing your entry and exit, like how well you're able to know the most optimal time to execute your trade also has a bearing on the number of pips that you should set for the trade. Don't you feel the same, Matthew?
Yeah. Spot on.
Yeah. Then when it comes to execution, the other thing that I feel is important is the way you manage the trade which is already running. Like, how do you manage it? Do you want to exit that trade partially? Because it's possible for you to exit the trade partially. So as you accumulate, or as a trade runs into profitability, you can actually book some of the profit. So you can close the trade partially. So you can have several targets for your trade. Again, in terms of managing the trade, you can also opt to add like a trailing stop. So if you're not in a position to monitor the trade manually, you can actually add a trailing stop, which would then help you to lock profits as you move towards profitability. And this mostly works well when the market is on a continuous move towards the profitability side. So yeah, so all these things would actually affect, or would actually, how can I put it? They would all determine how well the trade turns out.
Yeah, actually, I like the aspect of trade management. I like trailing stop. It's so nice. There's nothing that brings you peace of mind when you know you've entered into a trade. It's gone to the profit side, and now you're no longer at risk because you've already put in the trailing stop and you've protected some profit there, and it's still moving or even not moving. You see, that one again makes a trader so cool that you feel, well, it can move the way it wants now. I've already protected what I have. Maybe the only risk would come with that is, of course, the likelihood of you being going out of a good trade which you run for long within a short time. But again, it's better that, to me, I consider that one is better. I consider that to be better as compared to when you're feeling that, this position can always change, I can always get a loss. So trade management, really very important, especially trailing stop, and of course gives that peace of mind.
Exactly.
So there's so many things to come into effect when it comes to, of course, having a strong mindset and improving their mindset all along. So traders, you might want to look into, of course, using a trailing stop. Yeah. It really brings that peace of mind if you know that your profits are protected already.
Precisely, yes. Then the third thing is to, of course, evaluate your performance. So like you can decide to evaluate how you've been performing on a quarterly basis, and based on the outcomes of the basket of trades that you might have entered within a particular quarter, when you evaluate them, you'll be in a better position to know whether you're progressing, where you might be making mistakes, of course, depending on the outcomes of the trades, because in some cases you may find that you might have a good profitable streak over a certain period, but when you monitor a basket of trades over the same period, you will notice that your growth is perhaps being affected by few losing trades where you are able to lose a sizable amount of money. So once you have evaluated that basket, you will then be able to know what went wrong with the few trades that took back most of the profit that are made in the first place. So it's very important for you to do that evaluation, or within particular milestones, you sort of like take your trading statements just to track how your performance has been, in order to spot any anomalies that you might have experienced within that period.
Yeah, maybe the word that might express it better is learning from the mistakes, and of course very in line with continuous improvement of the mindset. So if you cannot then evaluate or check out and take into stock, what have I been doing, why has it happened this way, then improvement becomes difficult, because you don't have a chance of changing something wrong, because you don't even know whether you're doing something wrong.
So what was wrong in the first place. Exactly.
So if a trader has to keep on growing continuously, it's always good to check out how you've been doing, evaluate your trades. And this one brings again something like a trading journal. Again, something very broad, a topic very broad. Maybe you might consider coming up with it in another specific live stream to air out all those things. But evaluating a trade, being able to check out how you've performed, having a list of how your trades have been doing, then also helps to build a strong profile of yourself, and that's when it's very important when it comes to believing in yourself, being confident in the markets, and having some level of consistency, because you're able to maybe gauge yourself in terms of win rate and how you're able to perform in the market. So evaluation, again, one thing of continuous improvement of the mindset. Spot on, Edwin.
Yeah, so we cannot claim to be perfect. No trader can claim to be perfect.
No.
We are always seeking that perfection. So it's sort of a journey, it's not a destination. So yeah, so there needs to be that continuous improvement mindset so that you can perfect your craft over time. So
yeah,
that is what.
maybe I can repeat. Maybe I can repeat what you said previously, just to have them in line. You said it's a journey. It's not. It's a journey with pitfalls. So it's not all about winning all the time.
Yeah.
It's a mix of wins and losses, but and even most importantly is what matters is how much do you lose when you lose, and how much do you want to make sure that you're winning more than you're losing. So once you evaluate is where you're able to learn such a trend.
Yeah, in fact, you don't need much, by the way, when it comes to the win rate. With a win rate of 50% or 60%, like if 5 out of 10 trades make you profit and 5 make you loss, with a good risk to reward,
exactly,
you can be a profitable trader. So it's not a matter of winning every other trade, but the bottom line is when you're winning, are your winning trades able to wipe out all the losses that you've incurred with your losing trades? So that's the bottom line. Yeah, so basically, you need to adopt a continuous improvement mindset in order to strive towards that perfection that we are all seeking. And at this point, we come to the end of today's session.
Yeah. So just to recap all this, make sure you prepare, and preparation will take quite a bigger part of it, because once you prepare, then the execution bit becomes a little bit easier. But of course, there's more that comes into it: position sizing, the lot size you're taking, risk management. Then once you do all that, make sure to evaluate and keep on improving. It's always a cycle. You're keeping growing. There's no one trader who will not keep growing every single day, because even the markets are dynamic. Today you have this event, next day you have got these events. The way you're expecting the markets to react is not what they are reacting, and things become very different. And actually, just would want to mention, Edwin, before you close this one, that this journey of improvement, this journey of building the skill, moving off from the luck and building it to be a skill where you're able to like merge your trading strategy with the right frame of mind. It's something that we're able to take our clients through, the ones who are interested to come through mentorship. And it's a journey we're ready to walk along with you. And with this one, of course, I want to mention about, for example, the NFP data release, which will be coming up at the end of the week, even as we insist more on being able to analyze the market, being able to have a strategy, of course, based on the technicals and also based on the fundamentals. Of course, we have one of our own, David Madden, covering the non-farm payrolls. Also be part of these. We want to urge clients to be part of these and come get the knowledge. Whether you are experienced or not experienced, you always learn something new, and it should be open to learn in these markets, because that's the only thing which will of course assure you of continuous improvement. We will share towards the end, we will share the link for the NFP webinar, and that's going to be of course an opportunity for you to learn even more. And of course, we also encourage more of our traders to get along with the events. Let's also celebrate the ladies traders, of course, in this space. And along with that, we'll be holding a Twitter space on Friday on why women are better traders, or why women can be better traders. And of course, looking forward to see you on the other end. We don't mean that men are not good traders, but also women can be good traders. We'll be looking forward to move that conversation to the next level, and of course, inviting everyone to be part of it. So that's the bit I wanted to touch on, guys. Let's always get better. Let's remember to have our minds in shape as we are trading in these markets. They always have got a way of spiking our reactions, whether you're winning, whether you're losing. So always remember to prepare, execute, evaluate, and keep on improving. Thanks. Over to you, Edwin.
All right. So as we conclude, in case you have any question, you can always send your question through this email. Then on Fridays, we will be having a Q&A. And there we can get to answer the questions that you'd have sent us prior to that particular session. Otherwise, I wish to thank you all for finding time to attend today's session. And I look forward to having you in our subsequent sessions. So enjoy the rest of your evening and see you all.
Thanks. All the best. See you next time. Bye.
Bye.